Is long-term care insurance a good idea? Stay tuned for Health Politics.
Welcome to Health Politics with Dr. Mike Magee, a weekly program exploring important trends in health.
Thinking about getting older may not be one of your favorite pastimes, but planning for it is essential. The average cost of 1 year in a nursing home now exceeds $70,000, but the average net worth of a 65-year-old is only $110,000. This means you could blow through everything you have, including your home, in 18 months or less. Maybe you're only in your 40s now and hardly thinking of your golden years. That's trouble. The estimated average cost for 1 year in a nursing home in 2030 is $190,000. Now, many of you might be saying, but I don't want to go to a nursing home, and you're not alone there. No one wants to think of themselves as incapable of their own care or consider having someone else run their lives. But the reality is that 60% of current 65-year-olds will require some kind of long-term care in their lifetime, either at home, in an assisted living facility, or in a nursing home. That's why so many people are looking with renewed interest at long-term care insurance, a safety net concept for seniors that has been around for quite some time, but is now suddenly more relevant than ever. What is long-term care exactly? It's different from what most Americans think of as health care, and it usually isn't covered by health insurance policies, HMO plans, or Medicare supplemental policies. Long-term care can range from basic help with tasks around the house to more essential assistance with activities of daily living, like bathing, eating, or getting dressed. Of course, when you're in your 40s and 50s and 60s, it's difficult to predict how much care you're going to need down the line. But you shouldn't let that stop you from making financial plans. Currently, only 7% of American seniors have enough saved to cover even 1 year of nursing home care. Thus, 70% of single people and 50% of married couples who require long-term care become destitute. You're not alone either if you think you'll be able to fall back on family members or friends if you get into trouble, and you'll be able to age in place at home. This might work for some if you're lucky and aren't disabled or markedly ill, if you don't have Alzheimer's or dementia, and if your family is supportive. In fact, nearly 70% of seniors currently receive volunteer care from their family and friends. But looking ahead, this safety net is likely to weaken. With the size of the American family getting smaller, there are fewer adult children to do the caregiving. Also, children live farther away from their parents than they did a generation ago. And lastly, many more women are part of the workforce now. This changes the future landscape because out of the current 23 million unpaid caregivers in the U.S., 70% are women. When you consider the unpaid caregivers who provide 40 or more hours of care a week, 80% are women. Given all these factors, it's obvious that the percentage of seniors who can fully depend on informal family caregiving until they die will shrink. In addition to family and friends, Medicaid has traditionally been another fallback for long-term care. Through a variety of legal loopholes, a failing senior or his or her family can spend down their assets, basically causing themselves to go broke on paper and then qualify for government payments to a nursing home. But as our society has aged and the costs have risen, Medicaid, which is a partnership between the state and federal government, is feeling the strain. Medicaid expenditures now account for about 25% of the average state budget. In response, the Deficit Reduction Act of 2005 modified the rules, making it somewhat more difficult, though not impossible, to qualify for Medicaid coverage. Are you getting the picture yet? Unless you can afford to pay $70,000 a year now, or an estimated $190,000 per year by 2030, you need to think about long-term care insurance. The policies are increasingly common and flexible, but of course, they're not free. It can cost a 55-year-old $5,000 per year for a plan that provides $200 per day for lifetime, with an annual 5% inflation adjustment and a 60-day waiting period. That probably puts this type of insurance out of reach for a good number of people. But here are a few things you can do to bring down the cost. 1. Limit the benefit period. Only 8% of seniors require coverage for more than 5 years. If you go with 5 years of coverage versus lifetime, you'll save $2,000 per year. 2. If you're married, consider a shared policy. Plans now allow couples to buy 2 policies almost for the cost of 1, and you can share the years. 2 6-year policies with a $150 daily benefit can be had for $3,300 a year. So for $1,650 a person, you get 12 years of total coverage that can be split as needed. If a husband requires 3 years of coverage before passing away, his wife still has 9 years of protection in front of her. 3. Don't be penny-wise and dollar-foolish on key benefits. Since costs can be unexpectedly enormous, be careful with waiting periods. Going from a 90-day to a 180-day waiting period will save you about $200 per year. But if you are unlucky enough to have a debilitating stroke, those first 6 months of uncompensated care in a nursing home will cost you $36,000. Also, be sure to purchase some inflation protection that at least upgrades benefits to match increases in the Consumer Price Index. And 4, if you're in your 50s and healthy, look for an individual policy versus a group policy. Otherwise, you'll be factoring in the actuarial cost of individuals who are less well than you. And compare the prices from a few insurers, including name brands like Genworth Financial, John Hancock, Mass Mutual, MetLife, New York Life, and Prudential. The bottom line, you're not going to be young forever. Set aside some time and money to ensure you'll have the care you need when the time comes. For Health Politics, I'm Mike Magee.
Thank you for watching Health Politics with Dr. Mike Magee. For more information on this topic, please visit our related web links, discussion guide, or downloadable transcript and slides. For videos and information on a variety of other health topics, visit our homepage at healthpolitics.org. If you would like to subscribe to our free weekly video, click on Subscribe to Health Politics and enter your email address. Again, thank you for watching.